Federal Reserve has extensive power over the direction of the United States economy. That's why the central bank has remained insulated from politics for decades.
But the latest in the back and forth between President Donald Trump and the Federal Reserve Chairman Jerome Powell could leave American households caught in the middle. Karin Caifa has a look at why the Fed matters to your money. Good afternoon, Karin.
Good afternoon, Brenda and Joe. The Federal Reserve actually does a lot that impacts household budgets, setting policy that aims to keep inflation low and as many Americans employed as possible. And that's why some economists say it is so important to keep a distance between the Fed and politics.
We have a bad Fed chairman.
President Donald Trump at odds for months with Federal Reserve Chairman Jerome Powell, who revealed on Sunday he's under criminal investigation by Trump's Justice Department.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president.
Trump has denied involvement in the Powell probe, but for decades, Federal Reserve chairs have insulated the central bank from politics, and economists broadly agree that's a healthy necessity.
It's really important to say that these people are not political. They really want to act in the best interest of the economy.
Because Fed policy decisions trickle down to every American household, from the price of groceries to mortgage rates.
Through monetary policy or influencing rates across the economy, the Fed helps keep inflation under control and the labor market healthy. The way that people feel this in their household is generally in the interest rates they pay on credit and loans.
And NerdWallet senior economist Elizabeth Renter says short-term economic gains from cutting rates can reverse in the long run.
More hiring, higher economic growth, and these things are especially attractive during an election year. But over time, these lower rates can overheat the economy, leading to that higher and higher inflation.
In the current climate, some Fed observers believe the central bank could pause on rate cuts to avoid the perception of political influence.
And the Fed will announce its next decision on interest rates 2 weeks from today on January 28th. And also in the coming weeks, we expect to hear President Trump's pick for the next Federal Reserve chair as Chairman Powell's term runs out in May. Brenda and Joe?
Well, Karin, within the last few days, we've seen inflation and jobs data from the federal government. What do those numbers tell us about where we are in the economy right now and what course of action the Fed may take later this month?
Well, Brenda, we got jobs numbers, the last jobs report of 2025 that came out last Friday. And what it really all added up to was a labor market that slowed with growth in 2025 significantly from 2024. We also got the inflation picture today with the wholesale side of things, complementing the consumer side that came yesterday. Consumer inflation remains a little bit more elevated than where the Federal Reserve would like to see it. And also, the wholesale side remains a little bit more elevated as well. What the Federal Reserve wants to see is what is in the system that is keeping that elevated, and is it in fact the tariffs that the White House implemented last spring. So they're working to see what's happening. The economy is still growing jobs. Inflation is close to that target rate of 2%. So it may not offer too much incentive for the Federal Reserve to move on interest rates when they make that next decision in 2 weeks.
Very interesting. Okay, Karin Caifa reporting live for us this evening. Thank you so much.